How's it going, everyone? This video is going to be over using order blocks for continuations. Now, if you've seen my reversal sequence video, you know how I look at reversals, and many think that if they miss the reversal entry, they are left behind, and that is simply not true. That just means the reversal is confirmed, and then I can look for continuation entries. So how do I do that? So the first thing we got to look for is the reversal. So here you can see the reversal sequence has formed with the purge. We have the change in the state of delivery. So we have an invalidation at this low. Now, if I miss this first entry here off the order block, or I want to wait for more confirmation, I just need to let some structure form and essentially waiting for that higher low to form. Now you can see here with a fair value gap, price trades back lower into a point of interest. And then when we get the close through, the down close or series of down close candles into that point of interest, we have a new invalidation. Using that invalidation, I can then position myself with my stop on this low instead of the reversal low, allowing me for better risk to reward to catch this expansion move. Now there are two types of entries I look for when seeking a continuation entry, and that is a reaction out of a fair value gap or a sweep of a low. So you can see here, as shown in the first example, when price retraces into a fair value gap, that will be used as the important level. Then when the series of down close candles is closed through, I can then look to get on side with that with my stop at the low. And then the next way I will look to frame entries in a continuation is when we sweep out a low and then close through these series of down close candles that swept out that low, looking to get on side with the continuation following. Now, the only time price does not need to sweep out a low or reach into a fair value gap is if we are using correlated assets and have an SMT with that. So you can see here with two correlated assets, one sweeps out the low while the other doesn't. I can then still consider this an opposing candle or an order block because it is paired with SMT. So let's hop into TradingView for some examples. So here we are in our first example, and you can see on the daily chart we have had multiple days of expansion, and then we have a nice large wick here. If you've seen my wick video, you can see we can use this to frame a reversal if price respects the lower half of this to trade lower. You can see we fall just shy of that previous day low, creating equal lows. So with this, we have an hourly change in the state of delivery here, and going into the next day, we come into the New York session and we sweep out this high, which is also paired with SMT. So all things combined, we have a bias to look lower, and we have just swept out a high, still respecting the wick of this higher time frame candle. Now, if you've seen my daily bias video, you can see with closing back inside the range here on the hourly candle, I can look to trade this lower from here. So going to the 5-minute. So down here on the 5-minute, I have also added my indicator so you can visualize the hourly candles, and you can see our draw on liquidity, which is that previous day low marked out there, which also lines up with our standard deviation projections. So you can see we have now had that change in the state of delivery, so I can look to get on side with this move here. Now, as it starts to trade lower here, I might think that I have missed the move, when in reality, that is not the case. All I have to do is wait for a new order block to form, right? So instead of trying to chase this, I'm just going to wait for a point of interest, which is either going to be a high or a fair value gap. If you notice, we don't have any highs in here in the area I'm looking to see respected. So marking out these fair value gaps here, there's one, and even one above. How do I know which one to look for? And the reality is I don't need to know which one forms the high because I'm not looking to trade the high. I'm going to let the high form and then trade the continuation off of it or the order block formation. So let's see if we get a continuation. You can see it does reach up all the way into that last one. I'm not interested in trying to take a position until what occurs. We get a closure through the series of up close candles into an important level. So to clean things up, I can remove those fair value gaps as we did tag this one and wait for a closure through. We have yet to get the closure through, so I'm just waiting. Now, if this is paired with SMT, I can also consider this level here, but without SMT, I'm still using this level. Now with the closure through, I can look to get on side with that position, my stop on that high, and then looking for that previous day low. So let's see how this works out. There we go. We open a new candle. We trade a bit higher here. Now, if we're going to get a continuation lower here, where do we want to see a closure? Below this level here. That would now validate a new high. And there we go. We go and take out that previous day low or our target. So just to review, I don't need to capture the initial move here. I can wait for these continuation entries, which I'm looking for order blocks to form or for price to reach into an important level and then close through this series of up close candles that did that. To me, this is a higher probability entry as this high has already been confirmed, and I'm not trying to get the low risk sell, but instead the first or second stage of distribution. So let's get into another example. So here we are in our next example, and you can see we have had a nice expansion on the previous day. So if this is going to get a continuation, we'd want to see a shallow retracement to continue higher. So you can see we are getting a shallow retracement. These are not aggressive candles showing a reversal. We retrace into a fair value gap here with a small little tag. So let's drop down to a lower time frame. Now, since we were using the 4-hour chart, we'll hop down to the 15-minute time frame. So you can see here, we open a new 4-hour candle and we sweep out the low here. So if we are going to reverse off this previous candle and expand higher, I'd want to see a change in the state of delivery or that reversal sequence. So you can see we're forming down close candles here. And one thing to note is you notice how this is also the same as the opening price that sometimes occurs. And you can see we get another little sweep here of those lower time frame equal lows. And now we have that change in the state of delivery. So this would be the first reversal entry. However, if I want more confirmation, or if I miss that and I want to wait for a continuation, I'm just going to wait for an important level and then for price to form an opposing candle. So you can see here, we have a fair value gap that price is reaching back into, and now we have a down close candle into it. So if we close through this down close candle, we can then look to get on side with the move higher. And that's fine if it digs a little bit deeper. Just want to wait for the closure over that. And there we get the closure over it. So now if I was going to get on side with this, I could take an entry, my stop on this low, and looking for 2R or that high there. So as we let this continue, you can see it retests. Now with a retest of this order block, we now have another down close candle into an important level. So this low should then be respected, which you can see it retests, it is respected, and then we trade higher hitting this previous high and 2R or completing the 15-minute market maker buy model. So just to review, we have the 4-hour fair value gap is our important level. I let the change in the state of delivery occur, not looking to get on side with it, or if I just miss it, and then using the continuations following this to get on side with the move. And what I am doing is I'm actually allowing all the timeframes to align in one direction to have expansion occur. So let's get into another example. So here we are with our next example on the oil daily and hourly chart. You can see on the daily, we have swept out our previous day, we have closed back inside, and we have that hourly change in the state of delivery. Now, one thing I'll talk about with projections here is when you have a very large manipulation move and the projections do not make sense within the range, that is when I generally will look to target the -1. But you can see here, we have marked out our previous day's lows via the indicator, and that is what we will look to target. So you can see the reversal has formed. Let's see if we get a continuation. And you can see we just start to trade lower. And in this case, I don't really trust this high generally to stay intact. So I can just wait. And that is more of a convincing run. We get this move higher and then an aggressive displacement lower. You can see we fall just shy of that previous day low. And we have now this series of up close candles into an important level. What is that important level? It is sweeping out that high to the left. And so then now I could look to get on side with this move. Now, in the case that we have such an aggressive displacement, it doesn't really make sense for my final target or my first target to enter on the market with my stop on the high. And that is when I will look for a retest entry there. So let's see what happens. We get tagged in. We then get another closure below. So I would not want to see this high get hit, or this gives me another entry. And let's see what happens. And there we get the continuation lower. So just to review, we have the change in the state of delivery, we have that reversal, and then I can look for a continuation entry by looking for price to trade into a fair value gap or sweep out a high, and then look for the order block that forms there. Now let's get into another example. So here we are with our next example, and you can see we have a consolidation range here. In this consolidation range, we have swept out the low, and we have a nice aggressive move lower and then back into the range, as well as closing inside the previous candle. So with this, I can be looking to trade back into the range or higher. So I'll go from my hourly chart down to my 5-minute chart using my time frame alignment. And you can see here, this is one where I may catch the reversal candle. However, if I don't, is there a continuation entry? So here I want to talk about one thing. If I'm looking for a low to get swept out or a fair value gap to get retched into to form a valid opposing candle or order block, I need that in this area here, which I do not have. So that either means that I do not get a setup until we form some more structure that I can trade off of, or I can be more discretionary with it. But mechanically speaking, there is nothing here for me yet. So as we start to trade higher, we get this expansion away, which makes me think we do not come back to revisit this low. And if we continue to trade away without sweeping out any lows or reaching back into a fair value gap, this is just a move that I am going to miss. So you can see here, we do sweep out some lows, but we don't sweep out this low yet. So let's see if we do. We don't, and we just trade this higher. So this is an example of a move that kind of grinds up, and it's not one that I would be able to participate in because mechanically how I define my order blocks to form, there are no opportunities in here. So let's get into another example. So here we are with our next example, and you can see we have taken out this side of the range, closed back in, so I'd be looking for a continuation lower in this day. And you can see we just kind of open and fall off. So not wanting to chase, I'm going to let a lower high form or look for some structure. Now reaching back into this fair value gap here, and then forming a nice closure here, I could anticipate price to reverse here, and I can look on the lower time frame. What I'm anticipating is the formation of these opposing candles or a continuation on this time frame. So let's go down to the 5-minute. So down here on the 5-minute, you can see we have this reversal here. It is a bit messy. So if I don't want to catch the reversal, I can let some more structure form and look for a continuation. See, a bit messy here. I'd want to see a high taken out. And then this is the first possible entry for a continuation, as it has retched into an important level, swept out a high, closed below the up close candles. In this case, it's a singular one. So I could look to get on side with this move here, targeting the lows. Let's see what happens. That is the first possible entry. Now let's see if there's more continuations that follow this. Now some will consider this a continuation candle if we get closure below this. Now I do not, because I need it to reach into a fair value gap or sweep out a high, and it fell short of this fair value gap here. Let's see. We do get the closure below it. I don't consider it. Now I'd be looking for another continuation if I don't think I am chasing it, as I have further downside objectives. Here, we're anticipating a continuation in this candle here. We have price reach up into a fair value gap. That is meeting our requirements. And then price closes through the up close candles into that area. So if I wanted a later continuation, this could be an attempt. Let's see if we can get to R out of this. And you can see another continuation entry here. And there we go, we get 2R. Now, obviously, I prefer the entries before our short-term targets are taken out, but I hope you can see that when price is trending, it's going to respect up close candles, or if it is trending higher, down close candles. So let's get into one more example. Now in our last example here, I want to go to the higher time frames. Just like most concepts shown on this channel, it is fractal. So what we were applying on the lower time frames, we can also do on the higher time frames. So here we are on the daily and monthly chart of GBP USD. We are trading within a range, and you can see we have equal highs up here. We have swept out the low of the range. And if you know my reversal sequence video, we have this purge or the turtle soup, we have an inversion, and then we have the change in the state of delivery. And if you don't know what I am talking about, check out that video. But this would be the reversal. Now, if I expect this to hold, we'd want to see a continuation. Let's see if anything is offered. So here we get that displacement higher. We reach back into this fair value gap here. We have down close candles. So if we close over these series of down close candles into an important level, that would form a new opposing candle or order block. And there we do get that closure. So now I'd anticipate this low to be hit. Let's see if we get another continuation. You can see we retest that opposing candle. And one thing I will consider are volume imbalances as another gap or an important level when paired with something like reaching into another opposing candle. So now as we trade this higher, and as we let this play out, you can see we go and take the other side of the range. So you can see I don't need to catch the very first entry to still have a directional bias or get on side with a move higher. Now I hope you enjoyed this video. If you did learn something, please consider liking and subscribing, and I'll see you guys in the next one. Have a good one.